Goedenavond iedereen, welkom bij een nieuwe special guest call. Dus elke maand doen wij een speciale call. De laatste maanden zijn we ons aan het, hoe zal ik het zeggen, focussen op alternatieve investments. Ook sprekers die bij Kapitaalkracht zijn komen praten. En vandaag hebben we niemand minder dan Marzio in ons midden van A-Note. En wat houdt dat juist in? Kort gezegd, investeren in muziek. Welkom Marzio, how are you?
Thank you, Tim. I'm good. How are you? Thank you for having me.
Yes, very nice to having you. What did you think from the previous event we together did? Was it nice? Did you like it?
It was a very nice event. It was a very broad event with a lot of asset classes, right?
It's interesting, huh?
It was like to open up like to the different asset classes that are available for investment.
Yeah, the focus was like in alternative assets. A-Note is actually one of them. Can you tell us from where the idea to start investing in music?
Absolutely. The idea actually came in 2017, 2018. I was working in an investment fund, but the investment fund was doing totally different thing. It was investing in liquid stocks. It was investing in
liquid stocks.
Liquid, not in alternatives. But the problem is that it was the period of negative interest rates. Negative interest rates. And one of the funds we were managing was supposed to make passive income with low volatility. We couldn't do it. It was impossible past negative interest rates. So with my co-founders, we found out that investing in music royalties, you receive passive income, typically higher returns than the ones you find in the real estate or in the bonds market, very higher returns. And so we decided to open up the asset class. It's a very fascinating asset class for investing.
Yeah. Okay, you have also some slides for us in the coming 40 minutes. I'm very curious because I like music. I mean, you can invest in it. It's a double pleasure, actually. I'm gonna add it to the screen, and then we can start to introduce your A-Note platform. You want to say something?
But maybe I can just give a quick overview of the platform, if you allow me.
Yes, it's possible. We can add. Okay. Yes.
My screen.
Voila. Yes.
Okay. Amazing. This is a very quick introduction. We will go back to this one at the end of the webinar. But just to give to the who's watching this webinar, just a quick introduction about what is A-Note, right? Mm-hmm. Because otherwise, too many slides and then we lose the focus. A-Note is a trading platform focused on catalogs of music catalogs. So this is what you will see here. And at the end of the presentation, I will go back to the platform to guide and to show or to answer. Also, we will have also Q&A session at a later stage to possibly explain what of all of these elements mean.
Okay, perfect.
Fantastic. So we go back to the slides, I suppose.
Yes, we can do that.
Fantastic. Okay, so what is A-Note? A-Note is a platform that starts from one question. The question is, who doesn't listen to music? Who nowadays is not connected to social media, doesn't have Spotify, YouTube, Apple Music, Instagram, Facebook, TikTok? Something that we typically, as consumers, we fail to recognize is that music is everywhere. And we, all of us, 7 billion people that we are on Earth, we all participate one way or the other in the music economy. So indeed, as I mentioned before, the idea that came before 2020, 2018 was, how is it, what would happen if we allowed the possibility of investing in a song you love, to investing in famous songs? So from the idea, and me, Marzio, Greg, our CTO, and Matteo, the three of us, we came about, and in 2020, we launched A-Note Music that I gave a preview. A-Note Music is a trading platform. It's a stock exchange. It's a marketplace that takes everything that is happening in the financial markets and applies it to the music industry. So we have a primary market, a secondary market, and I will show you later. But actually, in 2020, it was the good moment to launch a note, because I don't know if you guys also noticed, but in the past 4, 5, 6 years, if you open newspapers, you would see that there was a deluge of money, a lot of money invested in music royalty rights. More than 5 billion every year are invested from private equity people like KKR, Carlyle, Blackstone. The big private equity money is being invested in music royalty rights. You may have seen that Justin Bieber sold his catalog for 200 million, Britney Spears recently for 200 million, Bob Dylan for 300, Pink Floyd, Bruce Springsteen for 500, the Queen sold for 1.27 billion. There is interest from, no, but because there is a lot of interest from financial investors to invest in the asset class. And so you see like these massive deals. But the question is why? Why do private equity funds that can invest in anything, why do they decide to invest in copyright of songs? The most important aspect is passive income. As I mentioned before, you invest in copyright, you have the right to receive passive income. Every time that the songs are played, streamed, restaurant, in clubs, in weddings, anywhere there is commercial usability of music, you receive royalties. Who pays these royalties? In Belgium, Sabam. For example.
Sabam, yeah, indeed.
Sabam for public performance. And so moment you own a song, you receive royalties from Sabam every 3 months. And then you can sell it through a platform like a note. The other reason is that this passive income lasts for a long time, lasts for typically 70 years. This is one of the charts that I love about the music industry. This is the historical royalties of some songs that were released in the 60s, 1960s. You see how stable.
I want to say that it's very, very stable.
Extremely stable. These are famous songs indeed that they were put in a trust called Mills Music Trust in the US. It's available for trading OTC. And you can buy, it's public available data. You can see how many.
We do it. We do it actually with Market Vision Capital. I'm the lead analyst for Market Vision Capital. And we do it over the counter with the fund. And it's actually crazy how the yield is generated every year. It's actually very, very nice. Yeah. And because of that, I asked you, because I believe in it, because I see it, how it works. And that's very interesting for investors from the trade premium community, actually, because they are very good investors. They do trading, long-term investing, but also alternative investing, ETFs also. So they are very, very, how do I say it, big in their minds about investing. And that's important, huh?
Yeah. No, I totally agree. It's important to have a good understanding of what it means to invest, or what is your target. Are you more short-term? Are you long-term as an investor? Are you looking for diversification? Are you looking for passive income? Are you looking for growth? What is interesting in the music industry is that it basically groups everything together, because you have passive income for a long time, and then you also have growth. It's typically not easy to find an asset class which is both growing and providing passive income. In the music industry, you do. Why? Mainly thanks to streaming. More and more people are streaming. And Spotify was €9.99 per month 2 years ago. Now it's $11.99 and goes. Maybe for us as consumers, this is a pain, right? Because pain. But for the music industry, this means that there is a constantly growing royalty pool of royalties.
It's like oil, actually. For on the tank, it's pain, but when you also invest in it, it's good. It's like the sword of Damocles, actually. But it's nice to have an option in it.
Exactly. Indeed. I like the comparison with oil. So these are the main reasons for the big attraction of players from the financial industry. What's the problem? The problem is that before us, it was a closed industry. So a growing industry, passive income, not correlated, fascinating asset class, if you want. The problem is it was closed. So transactions happen with big private equity funds are big record labels, but it was not possible for retail to participate in the industry. So what we did is that we opened up access with the goal of bringing liquidity. So not only giving the possibility to invest in a song, but also to be able to sell it, trade it. Otherwise, you remain in the investment for 70 years, because music royalties last for 70 years on average, typically more. So it's important for us also to create liquidity and to pay royalties to investors on an ongoing basis, and to make this in a simple way, to make it intuitive to invest in music royalties. It's a fascinating asset class with its complexities, peculiarities, but we try to make it as easy as buying stock in traditional markets. And of course, your new favorite notification team after is in the morning, ping. I just receive royalties. Consider that if you invest in all of the catalogs on our platform, on average, we distribute royalties every 3 to 4 days. So every 3 to 4 days, you receive receive royalties. These royalty amounts, of course, are small compared to big portfolio, right? Over a year, on average, let's say between 8 and 10% every year. But so every 3 days, they add up. So you see your amount, your cash slowly adding up.
Nice.
Of course, what we did is that since we come from the financial sector, I'm specialized in quantitative trading strategies and financial microstructure. We built a whole ecosystem behind Enon. So what you see is a simple tool to get access to the industry. Behind, we have a very, sophisticated system including an IPO engine, secondary market, royalties, and of course, everything is with the goal of connecting catalog owners with investors. In terms of strategies, we see on the platform, we said it before, right? So there are investors maybe more growth-oriented, some others are more diversification. With music, you can theoretically apply many different strategies up to trading. Of course, you cannot go into high-frequency trading. We don't allow yet intraday trading on the platform in order to achieve, to try to have stability on the market, to try to avoid too sudden movements. But it's something that we are planning to introduce at a later stage. Now, a big question. So, of course, this is not a promotional webinar. This is a webinar in which I'm trying to explain some of the curiosities, highlights about the music.
It's important,
Exactly, about investing in music. So on our platform, you can invest in songs by Beyoncé, in songs by Justin Bieber, in songs by Avril Lavigne, Destiny's Child, Vianney, Drake, Gigi D'Agostino, famous artists. But I promise that none of these artists ever sold their catalog on our platform. They never sold to us. Why is it possible then when we have catalogs with songs from Beyoncé if Beyoncé never sold to us? Why do we have songs from Justin Bieber if Justin Bieber never sold? Truth is that Justin Bieber didn't sell, but his songwriter sold on our platform.
Okay.
Beyoncé never, but the manager of Beyoncé, the father of Beyoncé, sold his royalties on our platform. So one of the important lessons of the music industry is that a song is never just the artist. It's the artist, the songwriter, the composer, the manager, the producer, the label, the publisher. So each of these individuals or companies, they own a piece of the copyright. And so in the future, if they want to monetize, if they want to sell, if they want to IPO it, they can do it. So we have songs from Avicii, from Selwyn Fox, who's one of the songwriters, songs from Justin Bieber, from Steve James, who's the producer, and also Destiny's Child royalties. And something you see is also here, these are the historical royalties. Pretty remarkable stability, that's what is important.
Very stable. Yeah.
Very stable, sometimes with a little bit of growth. There is the updated one I will show you later on the platform. This is not updated, a little bit of growth, which is interesting here. Now, since we launched, we have transacted more than 28 million in volumes across more than almost 500,000 transactions in the primary, secondary, any royalty payments on the platform. We have approximately 50,000 community of investors registered accounts on the platform. And this is, I think this is where it becomes, juicy and I think interesting, right? Because everybody says, okay, cool, interesting. You can invest in music, but how much money do you make? So what is important to consider is that this is, of course, past performance is not guarantee of future returns, and you never know. Nobody has a crystal ball. But if we look at what we did since we launched in 2020, what our Catholics did since launching in 2020, more or less royalty return approximately 10%, a little bit plus. This is if you take the average screenshot of all the Catholics on the platform, you see that this is the index of the royalty returns. Okay. Passive income only. You see it's super stable because it's only royalty, right?
Nice.
Between 2020 and 2026. So this is what we call time in the market. If you only invest in catalogs on the platform, every time that new catalog is available, you buy one catalog, this is what you would have gotten in terms of returns.
It's actually cumulative, actually.
Correct.
Yeah.
So approximately almost 80% since the last six years, which is approximately 10% IRR. And this is cash. Cash on cash.
And when you earn the royalties every week or within 3 days, you get the royalties back in your investment, or must you do that by yourself?
Cash. You must do it with yourself. It's cash. Okay. Maybe, I don't know, like you invest and then you receive €3 or €30, 300, 3,000, depending, of course, on how big is your portfolio. So we don't reinvest it for you. We don't have, unfortunately, this function.
Maybe it's a nice function that the client has a possibility to choose it if they want cash or if they want a reinvestment module.
Yeah. But I think also one of the interesting aspects of the platform is that really, waking up in the morning at 8 a.m. and receiving and then you decide what to do with this money.
Yeah, of course.
Well, I think it's fun. Now, this is the time in the market. But our platform is not only you receive royalties. Our platform is also trading.
Mm-hmm.
So on top of the passive income of royalties, there is the noise, if you want, or the secondary market, or the capital gain and capital loss. Some catalogs go up in price, some catalogs go down in price. There are some moments, as every market, also on a note, you have moments of exuberance. The market is going up, it's bull market. Sometimes instead it's bear market, sometimes it's a flattish market. So it's interesting to see what happens if we add to the chart what I call timing the market. This is timing the market. Timing the market means the chart before, the royalty, plus the variation in price changes. So the light blue is the total return, okay? Total return. Okay. So including also changes in prices. Now it's slightly lower than the pure royalty return, meaning that overall the price changes have been negative, slightly negative. We're talking about a few points on a normal basis. But this is why I think it can be interesting to look at the asset class, not just from buy and hold and I don't think about it anymore, but also from possibly timing or trading standpoint. And what happens when there is a war? What happens? Is there correlation? There is no correlation. That's a question that usually is very, very, they ask us a lot. Is there correlation between, one of the reasons why people like music is that it's not correlated. So even if there is a war on the other side of the planet, people keep listening to music, you typically don't care, right? This is just the most recent example. The couple of weeks after the blowing up of the Iran war, you could see everything, even things that are not supposed to be correlated, like equity and bonds going down. I think also Bitcoin had a bad moment.
Yeah, of course.
And also gold. The only thing that was going up in it was oil. A note index, which is our royalty index, the total return index was up 2.5-3% before the war. This is so just to say that indeed there is this lack of correlation. Now, the last part of the webinar, I would like to focus on one question, which is how to value a music catalog.
Yeah, how to value, because you spoke about kind of bear market, a little one in the previous slide when you time the market, but how can you time the market in the music industry then?
So I before going to, maybe to answer this question, I think it's interesting to look at it's important to understand the fundamental value of music royalties. When you buy a catalog, what are you buying? You're buying a stream of cash flows. Okay? Stream of future royalties. And usually you buy these future cash flows at a multiple. So if you buy them, 10 times as much they make every year, you're making a 10% return.
Okay.
Give or take, right? So the question is what influences the price that you pay? What is interesting here is to look at the revenue life cycle of songs. So songs typically, this is a kind of a famous chart that we reproduced. Songs after they're released, if we think about it, the moment the song is released, everybody's listening to it. It goes on radios. I don't know, maybe it becomes the summer hit or the Christmas hit or whatever. Then after it reaches peak popularity, nobody listens to it. Okay, and then there is a seasonality 1 year after. People, oh yeah, that was the hit of last year. Let's listen to it again. Maybe it goes again on radio, much less than the year before. And then again and again and again and again, it goes down until the moment it reaches stability. Between 3 and 5, up to 7 years after its release date. That's a moment in which you typically, as an investor, you may want to enter, you may want to buy the copyrights of the song. So you don't want to invest here, too unstable. You want to let it mature. Basically, investing in music is investing in the stability in music consumption habits. If people listen to a song 5, 7, 10 years, 20, 50, 60 years after it's released, it means that it's in the mind of people. It's a generational play. It will keep being listened to by people, right? So this is why, and this is my second last slide, when you evaluate music catalog, there are mainly three factors you want to look at. Age. Old is gold. The older the song, the better. The older the song, the more you can pay. Hence, the lower the risk premium, the lower the yield. The more stable the song, the more it means that it's a stable song. It means that the royalties are stable, are here to stay, and probably there is growth. The more stability in royalties, also the higher the valuation, and potentially the lower the yield, because it's lower the risk. The more popular the artist, also in this case, and the higher the valuation, and the lower the risk, and the lower the yield.
It's like actually the blue chips in crypto, like Ethereum and Bitcoin.
Exactly.
Less volatility, more stable, and less risk. And altcoins is the other side. It's more risky and but also higher yields. I think this is the same actually then, huh?
Yeah, no, absolutely. I mean, the risk return, more risk means more return. Less risk means lower return is something that is shared across asset classes. The only difference is that in the music industry, you just need to wait. You wait. You wait 3, 5, 7 years. If people are still listening to the song, even if it's a little amount, you buy it.
Okay, if people have questions, send it in the chat that we can ask the questions to Marzio. You have also a demo. Is the last slide this one, or you have another one?
Yes.
Okay.
Yes. This is the last finishing slide. Of course, our app is available on Google Play and on the App Store. Check it out. Let us know what you think about it. don't hesitate to share any feedback. We're very, very happy to have a very strong customer support. Gina, especially our customer support, she's here. We're based in Luxembourg, by the way, guys. We're neighbors.
Okay, nice. And when you invest in your royalties, you can only invest with cash or also with cryptocurrencies. What's there the how do I say it? The medium of exchange, actually.
The minimum of exchange is euros, meaning every time
Euros.
every time you create an account on our platform, we also create a wallet for you, but not a crypto wallet, a euro wallet. A euro wallet is kind of a bank account, if you want, with MangoPay. MangoPay is an e-money institution where everything is segregated from our assets. We cannot touch your money. So whenever you upload funds, whenever you receive funds, maybe because you sold the catalog shares, or maybe because you receive royalties, cashback, or whatever you receive on the platform, it goes into your euro. Now, how do you get money on the platform?
Yes.
You can upload them via credit card. Too expensive, honestly. I wouldn't recommend. We also have this option, yes, of course, but usually the cheapest one is the wire transfer. We have a wire transfer fee of 0.5%. It's the one that MangoPay charges. Unfortunately, we are simply passing it through. We also give the possibility of uploading via crypto. Not that much, though. We have a limit on a daily basis, so you can convert your Bitcoin. I think we allow for, yeah. But you can convert, and then you receive the corresponding amount of euros on the platform.
Okay, nice. Okay.
Yeah.
And how is the regulation about taxation? Is it like the Pokemon cards where you have no tax on it, or how is that?
On the taxation, it depends on the country. Really depends. In some cases, it's taxed as personal income. In some cases, there are deductions. In some cases, it has some favorable conditions. I heard about. I'm not a fiscal expert, unfortunately.
No.
Belgium. In Belgium, I heard that there was some some better
taxation,
favorable tax treatment. Yes, also because I heard you guys right now there is a new law with higher taxation on traditional assets. I don't know, but yeah, taxation and fiscal policies are always a maze to navigate.
yeah, indeed. But it's also important to know if there's tax on it or not, because if there is no tax on it, it's a double win because the rest is all taxed.
I strongly believe that there is tax on it. Yes.
Okay. No problem. I have a question from Yuri. What is the minimum invest? Is there a minimum invest?
No. We don't enforce a minimum to. If you guys maybe allow me to share the screen.
Yes. Okay, perfect.
Let me see if I can.
Oh, sorry, Kenny.
Yeah, no worries.
Yes. Here, do we see the homepage?
Okay, fantastic.
Yes.
So to answer your question, there is no minimum to invest. You see, like this catalog. Take the first catalog. This catalog of jazz music from Denmark. Every share is 17 euros. So you can invest a minimum of 17 euros here in this catalog. Now, let me be clear: if you purchase 17 euros on a yearly basis, you make 8% of 17 euros. You start to see something interesting and fun if you want to with slightly bigger amounts. One of the things, for example, that we have is the bundles. The bundles, for example, are a tool, kind of our ETFs, if you want. With a bundle, buy equivalent number of shares of all the available catalogs on the platform. All the catalogs that satisfy our investor protection program for the investors. So minimum liquidity, minimum profitability levels, stability in royalties, and so on. And for the rest, it's not so, how to say, complex, let's say, to analyze. Of course, there's so much, you can really explore the ins and outs of the platform. But the most important aspect is the yield. So how much am I paying compared to the historical royalties of the catalog? Or the opposite yield is how much are the historical royalties of the platform of the catalog compared to how much I'm paying. Why do we express this as a range? Because we express the range of the last 12 months up to the last 3 years. So this is what it made between 12 months ago and 3 years ago.
Okay, nice.
In the last 12 months, if you bought it last 12 months ago, you would have made 8%. 24 months ago, 74%, 70. This is a catalog which is pretty remarkably stable. These are the historical royalties of the catalog. You see, market cap is 500K, so it's not a very big catalog. Life of rights, of course, and the price went up and down here. You see, but what is important is, despite possibly the noise, you can see the historical royalties are the important component, of course.
Nice.
Catalogs that we listed recently, maybe I think also interesting to look is, this is some catalogs from Destiny's Child. We divided the catalog of Destiny's Child in 4 subcatalogs. This is a catalog paid royalties just 2 or 3 days ago. If you see the blue, the dark purple one, you see that it paid much more than before. You see.
Nice.
There is a discontinuity, 19,000 versus 77,000. There was a discontinuity. Indeed, you see that the price went from when we listed it was 14 euros per share, 14.36. Now it's almost 17 euros per share. So that's why, it's an asset where, yes, it's important, the passive income, but there is also a component of receiving of potentially increasing value, or of course on the opposite, decreasing value, depending on the performance of the catalog. And as an investor, what is interesting is that you receive royalties on an ongoing basis. You see.
Very nice, and also a lot of stats actually.
Yeah, of course.
To see, to look at. Okay. Perfect.
Yeah. Here you can see what are the catalogs expected to pay, when they're paying. Here in April 28th, so we have still 4 catalogs paying in April. These catalogs are going to pay in May. These catalogs in June, and so on and so forth.
And when there is new music on the market, or we have songs that are coming in July, actually. Can you pre-invest in it like an IPO, or is that also possible?
Yes, we have, that's our IPOs or auctions, which is every catalog that you see traded here on the platform. Every catalog passed through an auction before, all of them. So the IPO is the way for the catalog to enter the market and to be offered for investors to invest in it. And then at the end of the IPO lasts between 1 week, 10 days, 2 weeks, 3 weeks. The moment we reach 100%, we close the auction within 24 hours. The IPO. And then after this, it starts to trade.
Nice. And where do you have an example of it? Where can we find that on the platform, or is it via an invite?
But no, in terms of auction, no. Right now we don't have auctions running.
Okay.
You usually see them here.
Okay.
You usually see them here, exactly like you see what we send.
Yeah, the bundles. Yeah.
On top of the bundles, but on an ongoing basis, there is a secondary market, which is both an opportunity to enter into the catalogs if you didn't purchase them in the primary, or if you have purchased them in the primary and for whatever reason you want to sell, you can sell to other investors. So that's important. What we try really to do is to improve the liquidity profile of catalogs on the platform over and over time, because it's important for us. The liquidity really becomes the most important aspect of the platform.
Yeah, because you have a lot of catalogs, and you must also have in every catalog actually enough liquidity to sell and buy.
Exactly.
I think.
Exactly.
Yeah. Okay.
Exactly. In some cases, you have catalogs with it's not big amounts of liquidity. In some others, with more liquid. One of the things that we see is that the majority of investors, they meet each other mid-market. So we don't have a lot of investors that buy, then insert limit by orders. We have a lot of investors though that when they want to buy, they buy. So you don't see a lot of bids. That's something indeed we are planning to work on this. We are planning to improve the market structure to incentivize
okay, perfect. Can you also screen or filter on the liquidity? How big the liquidity is from big to low? No.
We don't allow this option. But the liquidity you will be able to. You can see it from going into the order book. The order book of the catalog. You will see a little bit the liquidity. But what is important is we have, since we are talking about assets which are not big in size, right? So 500,000 euros Sundance, for example, this catalog, just the first one I was looking at. We have what we call the IPP. The Investor Protection Program is a system of tools that make sure that even if there is low liquidity in the assets, the prices don't exceed the price bands on a daily basis. This is similar to what you see in the traditional financial markets. In the traditional financial markets, you also have
market makers.
You don't have it in crypto, though. Crypto is Wild West. But in financial markets, you have price bands.
Yes, indeed. I have a question from Geert. How big is the risk of the squeezing value, like almost zero, for example? Is there a risk to decreasing in value?
Yes, there is always a risk. Any asset class always has risks. There is no, from my point of view, anything which is free of risk.
It's logical, yeah.
Now, what is interesting here is to look at the risks can be two sides. One is that the royalties of a catalog invested into go down because fewer people are listening to that specific song. Okay. Now, if you invest in many catalogs, this risk is less pronounced because you diversify. You buy a piece of Destiny's Child, a piece of Dinoro, a piece of Lucky Luke, a piece of here and there. So more or less, on average, royalties are more or less stable over a year, right? The second risk is the valuation risk. So if 7% return last year was good, maybe this year people want 8, or maybe they want 6. So this means that the valuation of the same royalties, okay, over time may change. Okay, so this is what creates also the capital gain or capital loss, or what we said before, the bull market or the bear market.
Yeah.
Today, a bull market or a bear market, it's either a fundamental change. So bull market means there are more royalties. Royalties are higher than before, than expected. Bear market is royalties are lower than expected. Not always. Many times, also in traditional finance, the fundamentals stay the same, but the risk appetite of investor changes.
It's changed indeed. But here there's also a follow-up question. What could trigger? What such event could trigger a decrease? Did you experience something like that in your career, or what are the events that mostly trigger some decrease in the broader markets, actually?
To decrease in the broader market, I would say a risk-off mode.
Also meaning, like now, actually.
Yeah. Risk-off mood, meaning even if the fundamentals are the same, there is less interest in investing in the asset. In other cases, there is risk-on, which is the opposite. What is interesting about the music royalties asset is that compared to, Bitcoin. Bitcoin, if you bought 3 years ago at 70, it would still be at 70. right?
Indeed.
In our case, instead, over time, there is royalties piling up, right? So even if the assets go down for whatever reason, if the fundamentals remain the same, you have the possibility of entering at higher yield, higher return. Yeah. That's very, very important. And this somehow provides also a safety net. It cannot, of course, you never say never, you never know. It cannot go theoretically to zero evaluation, right? Because at the point it becomes too good, the return you make from just holding the asset. So that's why it's a fascinating asset class. Cash flows, because it's connected with cash flows that are totally passive.
Okay.
For the investor.
Okay, nice. Very interesting. This was the answer from Geert. Thanks, clear answer. Very interesting. For me also very interesting. Dus if we cash out our crypto and we want to have a passive income that we not must go to work, we can invest all of our crypto in A-Note. Actually, that's the trick.
One of the things that we are working on, and it's not, I mean, I cannot promise, by one of the things we're working on is to intensify our connection with crypto and with basically going to...
Yeah.
Exactly.
It's important because that's the future actually.
Yeah.
More tokenization. Yeah, and I have another interesting question from Natalie. The price goes up when artists died like in art. Is that true? Is that in music royalties also, like in Michael Jackson or some other artists that are gone?
Depends on who is the artist, but the answer is probably yes. Probably yes. You never know. I mean, if there's... Can I share the screen?
Yes.
Okay, let me see if you see my screen.
This is the PowerPoint. Do you need the screen or the PowerPoint?
Yeah, if I can share my screen, my platform. Let me see if I'm...
You must add again.
Okay.
Beneath.
Present.
Yes.
Share screen. Entire screen. So, let me see if you see.
Yes, we are live.
Okay. So this is one of the catalogs we have, for example, Peter Anna Violin Selection Catalog. This is a catalog that we listed last year. Performed pretty well here. It's growing, but investors were expecting it to grow more here. So you see the performance on the platform is not stellar. Okay. Price is more or less a little bit on the flattish side, a little bit on the negative side. What is interesting is that in this case, this is a catalog where it's songs made by Peter Anna. Peter Anna is a songwriter from the United States for Lindsey Sterling. Lindsey Sterling is a very, very famous violinist, but kind of a rock violinist. She's got
nice.
You need to listen to the songs. It's amazing. She's an amazing performer. And a good performance, a good amount of this catalog is connected with the live performance of Lindsey. So the more she does touring, the more she goes into concerts, the more she generates royalties for her own catalog.
Okay.
So this is one of the catalogs in which if the artist, something happens to the artist, it might not be the best because the good percentage of the catalog still makes money from streaming and so on. But I would say 20 or 30% of the total comes from touring concerts.
Okay, nice. Okay, perfect. Other questions? Okay, I think we have no questions anymore. We talked about 45 minutes. Do you have no other things to tell or to say?
Tim, I could speak about it. I can speak like, how much time do you have?
Yeah.
No, but I think we covered them.
Okay, and do you have also a question from me? Do you have also a roadmap available for the future from A-Note? What do you guys want to do in the future? Can give some teasers?
Yes, I can give you some teasers. Yes, absolutely. I understand that's a juicy part, right?
Yeah, of course.
Oh, no, we are working right now on rebuilding of the user interface of the platform, so to make it more financial oriented.
Oh, nice.
Still with the music touch, but a little bit more
Yeah.
financial oriented. And also we are introducing bundles, more comprehensive and more advanced bundles, like bundles to buy into catalogs that are maybe the more stable ones, or catalogs that are the more high yield catalogs. So giving the possibility of choosing, because more and more and more, like the moment in which we at the beginning we started with one catalog, and then two catalogs, and then 3, 5, 6. Now we start to have 40 catalogs, and then slowly we will go to 45, 50, 100. So for the average user that comes on the platform, like you don't have that much time. I mean, we all of us, we have busy lives, so we don't expect everybody to spend time and understanding and so on. So we try to simplify. We try to simplify and to give the possibility of allocating with one button and to diversify your portfolio, and then to leave the experience, if you want, receiving royalties over time and then reinvesting.
Okay, nice. Thank you. Okay, thank you. I think we have said a lot. I think we have said everything that they need to know to invest in A-Note if they want. But I'm very interested to invest in A-Note. Knowing that Market Vision Capital, our fund, is also investing in A-Note. There's people that are investing in Market Vision Capital are also investing indirectly in A-Note. That's very interesting to know also. We also buy OTC. It's a higher level. But thank you, Marzio, to taking time for us and to.
Thanks to you, Tim.
Yeah, and maybe in the near future we can work more together. We will see what the possibilities are. Because the investing world is not simple to attract investors or people that are interested in learning finance. It's a very difficult sector. In how many countries are you guys now operating? Do you have an idea of it? I think Italy is very famous there or hot, but have you also other countries where you are very active?
Ooh. But imagine that we have investors, can you believe it, from 100 different countries, more than 100.
Okay,
Crazy.
nice.
Crazy. Now, of course, the vast majority, more than 89%, is from the European Union, because at the end of the day, we deal with euros.
Yeah, of course.
That's it. So that's why it's very important. We really have a wide audience. Catalogs. On the catalog side, we have catalogs from 11 different countries. At the beginning, we had catalogs from France, Italy, and Poland. Now we can say that we have catalogs from 11 countries, right? So we have a good representation of the music business.
Also Belgium?
From Belgium, not yet.
Not yet. Not yet is good. Not yet. It will come.
No, we are working on a catalog from Belgium right now.
Okay.
Let's see.
Nice. Okay, I want to thank you, and we speak each other soon. Thank you for
Fantastic.
your webinar and for your insights. In the
Thanks
platform.
to you. Thank you for the question, guys.
Yes. Bye.
We keep in touch.
Ciao.
Bye.
Bye.